never seen anything like this. This is certainly an unprecedented time in human history in so many ways. And I'm going to share my screen here so I can share a few thoughts. Can you guys see this screen here? Good. Give me a thumbs up if you can see us right now. We good? All right. So first of all, last time we met, we were talking about these great changes that happened during the Great Depression and how it led to our Securities Acts, which led to all of the regulatory laws that we have in place today that are affecting us in the blockchain world. And today it feels like we're in a similar time of momentous change. Every day feels like things are moving so fast right now. A week ago, just think about this, a week ago, nobody was doing video calls. Today, everybody is video conferencing. It is just incredible and mind-boggling, the speed of change. And we're going to talk tonight about what that might mean for our global economy. And this is a story that is unfolding in real time. It's happening right now. And we got one of the world experts to talk with us about how to interpret all of this. First of all, this is who we are. We usually meet in our Boston area, but welcome to those of you who are coming from outside Boston. We're a team of journalists, analysts, and investors that publish Bitcoin Market Journal. It's the leading industry publication trusted by 100,000 blockchain investors. We developed the Blockchain Investor Scorecard. It's the premier method for analyzing these new digital assets, such as Bitcoin and other types of altcoins, also called cryptocurrencies, or we call them digital assets. We've listed or analyzed over 2,000 of these and trusted by 100,000 blockchain investors each month. We also have something called the Blockchain Believer Portfolio, which is a common sense way of investing in Bitcoin and these digital assets. And quickly describing this, it's mostly stocks and bonds with a small percentage allocated toward Bitcoin or maybe the top 3 digital assets. And if you just Google blockchain believer portfolios, you can find out more about this. If you subscribe to our newsletter, you'll see where our portfolios stand after Q1. So that would be coming up next week. We'll be reporting on our results. I'm very eager to see how we've done in relation to the stock market in these times. But as of the beginning of the year, excuse me, we were outperforming the non-believers, which are the essentially stocks and bonds only. Our just tiny percentage allocated toward Bitcoin was outperforming, and the big believers that had more, about 10% in the top 3 altcoins, are roughly equal with the stock market. So I can't wait to see where this ends up. We also have a lot of really great investor publications that we put out. If you're new to this space, if you're just joining us for the first time, you can get our Blockchain Investor Manifesto by signing up for our newsletter at bitcoinmarketjournal.com, and you get a series of these around blockchain ecosystem, blockchain building basics, and so forth. We're really proud of those. We've gotten really great feedback from folks on the material in there. And then we also have our premier analyst, Mati Greenspan, who is doing a daily column for us. And again, you can sign up to our free newsletter. We are getting so much feedback on his daily updates during this time of coronavirus that it's really exciting to watch how people are just engaging at a new level in this. And Mati is brilliant at kind of bringing order to the chaos of everything that's going on. He is a genius at kind of helping take all of this noise and put it into something that's entertaining and funny, and he uses lots of pop culture references and song lyrics and things like that. So we're just really proud of this. I encourage you to check that out. And I write a column on Fridays as well. All right, our common sense disclaimer is this is for information, networking, community building. We'll have some time for community building at the end tonight. We don't provide investing advice. We're not financial advisors. This is just for ideas and information. You should know the blockchain market is a roller coaster. If you think the stock market is bad, just try investing in Bitcoin. So don't invest more than
I know, it's much worse. People think they're losing everything.
Yeah.
That's like a daily thing in Bitcoin.
Yeah, so
Right.
Felipe, if you can pause your, mute your phone, that'd be awesome. Appreciate it. Don't invest more than you're willing to lose 100%. Do your homework, think for yourself, and discuss your ideas with smart people. And that's why we get together, is to have good knowledge sharing between smart people, because there are really great investments to be made in this space if we do our homework and we think for ourselves. All right. All good? Before we move on, I want to check, see if there's any questions or comments or feedback. You'll have to put it in the chat box on the side or unmute yourself if you have any questions. All right, good. Just raise your hand or put something in the group chat if you have any questions. Okay, so let me try to set a little context for our special guest tonight. Last time we met, remember that, when we all met together? Remember that? We were in, remember that? We were talking with humans face to face in Boston, remember that? We talked about the crash of 1929, and we talked about how that led to the Great Depression. We talked about the Securities Act of 1933, and we just talked about this time of just incredible rapid change where it felt like every day had new news and there were just crazy things going on constantly. And today, I just took this screenshot from Google moments ago. Just Google economy and look at the news. And it feels very similar, with there is so much happening right now and it is so rapid and the change is coming so fast. And I've had, as I'm sure all you have, this crazy roller coaster of emotions where on one hand, like, we're doomed, and on the other hand, like, yet I look out the window and the sun is shining and the birds are singing and we're all still here and we're alive and we're talking. And so I feel a little bit, there's a lyric from Hamilton where Thomas Jefferson is singing, and he says, French have just started a revolution. There's no more status quo, but the world still turns and the sun still shines. And that's kind of how I feel, that the world is still turning, the sun's still shining. And in a sense, you kind of feel like, was this all a big fiction? Was this all just a big sort of mental dream that we all made up, this whole economic thing? But of course it's not. Of course it's real because we believe it's real. And that is what we've always said about digital assets and Bitcoin, is they're real because people believe that they're real. And that's what gives them value, is our collective belief that they have value. And so from that sense, it is very real. So what the US government has done is just passed a stimulus bill. You might think of it as a bailout or a lifeline, but they're calling it a stimulus for $2 trillion, actually $2.2 trillion. And you probably know the story here. A lot of this is going to go into the pocket of American jobs. Financial. And PK87, if you can mute yourself, really appreciate it. Thank you so much. However, in the midst of all this, we have this digital dollar. And there's been all of this drama around the digital dollar. And there was, I think there was wording in a version of this new stimulus bill that referred to a digital dollar. And then the wording, I think, was taken out. And I haven't actually been able to get my hands on a full text version of the bill. I have tried. So I'm not actually sure what is truth at this point. But certainly there was something about a digital dollar, and now there's a lot of drama around what did that mean? Was that a blockchain-based digital dollar? Was that something like an e-version of the dollar? What is it? So I would love any additional facts that people have about this, but certainly it has become one of the biggest questions around this is, this digital dollar, it's top of mind, but what is it and what might it be? And kind of the thinking, as I've heard it explained, is that the federal government's going to need a way to get the checks into the hands of all these Americans. And the idea is that a digital dollar might be an easy way of getting it out to them. Maybe that's put on some kind of preloaded debit card or something like that. I'm not quite sure why you can't just mail paper checks, but maybe this would be easier. So that's kind of one theory I've heard floated out there. But the question to me, and I'm going to just kind of take this one step further at this point, is really think about like two possible paths for the future. It seems with all of the discussion around this that some version of the digital dollar is inevitable. But is that the way things are likely to play out over the next 12 to 18 months? Because I think this cycle is likely going to be at least 12 to 18 months. Or is it going to be something more like a global cyber currency? And I take this term from our special guest tonight, this idea of a kind of one world currency, kind of a United Nations of currency, perhaps overseen by the International Monetary Fund, but some kind of world currency. And we are clearly at a turning point in human history. And we can jump through, and it seems to me that either or maybe both of these are possible paths or something totally different. That's kind of where my thinking is at tonight, and I wanted to share that with you guys before I introduce our special guest. Look at him here. You look like John Nash. That's so impressive. Look at you. Very complicated equations right there on the board. All right, so it's my pleasure to introduce Dr. John Edmunds, and he holds numerous degrees from Harvard Business School, Boston University, Northeastern Universities, consulted with the Harvard Institute for International, the Rockefeller Foundation, Stanford Research Institute, taught at numerous colleges and institutions around the world, and lived in 6 countries and spent 18 years abroad. He's fluent in Spanish, also speaks French. So clearly, he's an underachiever. Dr. Edmunds is also the author of this new book, Rogue Money and the Underground Economy. And I just got a copy of this, and I got to tell you, this is amazing, this book. I highly recommend it. It's an encyclopedia. So what's cool about this guy is he has all of this deep international finance experience, especially in South America, where he spent a lot of time. Yet he's also got this really deep knowledge of cryptocurrency. And I just will say on a personal note, Dr. Edmunds, I met you like, I think 2 years ago, and we traveled in the same circles in Boston. And I've always been really impressed with your generosity of spirit, your willingness to and talk about these ideas. It seems to me you're a really big thinker, but you're also very generous about sharing those thoughts. And it's your generosity that's brought you here tonight to talk to our assembled group. So let's give it up with a snap for Dr. Edmunds.
John, sorry to interrupt, but someone has their phone off mute, and it's really hard to hear.
Okay.
Yeah, it's PK87.
Got it. Thank you. We'll do our best to whack-a-mole here on the sound as we go along tonight. Okay. So Dr. Edmunds, let me hook this up here.
Good evening. I hope you can hear me, and I hope you're recording this.
We are recording, and we're so
great.
happy to have you here tonight. And first of all,
it's an honor and a pleasure.
Please explain to me a $2 trillion stimulus package, $2 trillion. That's the largest in history. Will you please explain this to us?
Well,
will you please explain this $2 trillion stimulus package to us in plain English? Where does $2 trillion come from? Did they have it in the couch?
No, not at all. No, they get the money by selling Treasury bonds. Am I? Can you hear me? Because I'm muted by a host. Can you hear me?
We can hear you.
Oh, okay.
We can hear you.
Oh, yeah, okay. Yeah, they sell Treasury bonds and they get money that way, and then they can spend the money again. And at this time, there's a huge appetite for U.S. Treasury bonds. So as many as they are creating, which is rather a lot, they're finding a ready market for those. And the way to tell is to just look at the price of the bonds in the secondary market. In a normal market situation, you would think that people would not buy if there's going to be a whole enormous increase in supply, but they're buying part of a pattern that we've seen now for weeks, which is moving into the dollar. And once they get the dollar, then what do you buy with the dollars? Well, let's buy something really safe. Let's buy a treasury bond. So that's really what's going on. There'll be an enormous fiscal deficit, but that can be accommodated at this time because of the demand for the treasury bonds.
So when we talk about like creating $2 trillion out of thin air, because I keep thinking, okay, we can't solve climate change and we can't solve the homeless problem. We don't have any money for that. And yet somehow $2 trillion is magically appearing. And then I hear, well, people are printing money. And I understand they're not literally printing money with an old fashioned, we don't have Trump like in his living room, like with a printing press. But we're buying these bonds, and by doing so, that's injecting more money into the system. Is that how it works?
Well, yeah, it's actually, I happen to have some Federal Reserve notes right here, and there's not any huge increase.
Are you hoarding those, by the way?
Well, actually, I was going to mention that it's called liquidity preference. Whenever anyone is concerned about things, they would carry more money in their pocket or have more money in their house or in their refrigerator where they would hide it. As a precaution against not having any when they would need it. So I'm actually carrying around more in my pocket than normally I do, but not a whole lot more because this is not about any instability in the banking system. This is quite the contrary. The banking system is in the best shape that it's been in for a long time, just before this crisis broke out. But what they did was they sold. Well, they haven't sold the bonds yet, but they're pretty clearly going to. And that'll bring in the money, and then they distribute the money. And then the question you brought up earlier is how to get the money to the people that will be receiving it, and how can they spend it. And they can print checks, and I'm sure they'll do some of that, and they can send it out by wire transfer, and they can send it out in prepaid credit cards. But this digital currency possibility is another one that has been floating around, and I would suppose they would get around to that eventually, but not immediately.
So okay, so quantitative easing, in a sense, is all about this sell and repurchasing of bonds. And my understanding with this is that when that happens, the price of these assets goes up, and because the wealthy are the ones that hold more of those assets, they are the ones who kind of disproportionately benefit from that. And so even though it's going to help people on the lower income bracket, it's the people on the upper income bracket that actually end up kind of benefiting from this quantitative easing. And what happens is the spread between the two grows larger. Is that right?
Oh, yes, but that's been going on for a long, long time.
Of course, yes.
Quantitative easing is the Federal Reserve buying mortgage-backed securities or long-term government bonds, which they did not do before the financial crisis of 08-09, and paying for it in cash. You can imagine that they paid for it in Federal Reserve notes, but really it was just wire transfers going into bank accounts. So what they did was they raised the price of those bonds, which brought some liquidity to the mortgage market and reactivated the housing market, and lowered the long-term rate of interest, and they managed to reactivate the economy, and that's how we got full employment.
Mm-hmm. So, okay, so all this money gets paid out through the magic alchemy of quantitative easing. What happened like 12 months down the road? How does this play out in your mind in terms of the economy in general first, and then we'll move into blockchain and digital assets?
Well, conventionally, there was the fear that if the government would issue too many bonds or spend too much money, that it would cause inflation. And it wouldn't happen now, and there's a couple of reasons for that. One is that people would tend to hold on to the money, some of it anyway, and not put it into circulation. So the velocity of circulation of the typical dollar bill in the economy would actually decline. You can't spend it if you're sitting in your house. But besides that, if they fear that they have put out too much money in circulation, they have a way of pulling it back in again, which is the Federal Reserve can sell bonds from their portfolio and demand payment in cash, so they can withdraw the cash that was earlier issued. The other thing I would mention, which is holding down inflation, is the really remarkable decline in the price of crude oil and across the board energy products. So pretty soon you're going to be seeing gasoline for under $2 a barrel, and if this goes on much longer, this price war that they're having in crude oil, you would see gasoline below $1 a gallon.
So you know that I'm a big fan of Ray Dalio. We were speaking of him earlier from Bridgewater, and he has talked recently about when this spread between the rich and the poor it widens. What you see is kind of a rise of populism, meaning, you know, the people start to get a little antsy about that. And certainly that's what we've seen in recent years. And if that continues on this trajectory, he says, well, that's where this usually kind of moves to either evolution, best case scenario, or revolution. And that, as you said earlier, may show up in the form of people fleeing to alternative currencies, such as digital currencies and digital assets. So did I get that story right? Is that
You certainly did. You certainly did. As the price of financial assets rises and the price of assets like houses, it does widen the disparity between rich and poor. And the poor live close enough to the rich so they can actually see how much better those people are living. And the poor don't have to be living absolutely worse off, just relatively worse off, and relatively will engender resentment. So I would say that's definitely a side effect of what's going on right now. But this is really a rescue operation, because we cannot allow a collapse of prices of assets, whether farms or buildings or factories or financial assets, which is what happened in the Great Depression. The Great Depression, the price of commodities fell drastically, the price of real estate fell drastically, and it was really a drastic shrinkage in the money supply. So Milton Friedman said that what the U.S. needed in 1932, for example, which was the worst year of the Great Depression, more than anything, the United States needed a good counterfeiter, because not enough coin and currency was being put into circulation. So what he really meant, and it was a sincere thought, was that there needed to be more dollar bills circulating around, and we have just fixed that, but in a much more scientific way. That is to say, we know how much is needed to fill in the gaps in the economy that have suddenly appeared, but also to put cash into the hands of people who would spend it, and also prop up the prices of financial assets so that we wouldn't have rich people laying off their gardeners and their household servants.
So you and I have talked about your time. You spent a lot of time in Chile and other countries in South America. And, you know, we in the Bitcoin community hear a lot about Bitcoin and digital assets being used in other countries, especially where there's hyperinflation or where the national fiat currency has been devalued. That's one of our favorite stories to tell in this community. So first of all, is that real in your experience?
Oh yes, yeah. Zimbabwe had an active trading in Bitcoin going on because the local paper money was, well, let's say collector's items, but not useful for buying anything.
So when your national or fiat currency is devalued to the point where it just doesn't have any purchasing power, it doesn't hold anything, then people tend to look at things like Bitcoin, even though it's wildly fluctuating. They go, well, it's better than holding it in the national currency, which is worth nothing. Is that right?
Well, it's an alternative. It's something that retains its value and doesn't have very much correlation with whatever political situation may be happening in one country or whatever monetary mismanagement may be happening in one country. And also consider that a lot of the growth of cyber currency occurred after 08, 09, when people really lost faith in the conventional financial system. And now you're seeing they have faith in the system, but faith in the system as a way of delivering higher profits to the rich and not really taking care of the middle class and the poor anywhere near as adequately.
Yeah. So, so in these countries where the currency is devalued to that level, just briefly, how does it happen? Like, why does it happen that a country's currency is worth nothing?
Well, let's start with how hard it is to collect tax. In many countries, it's difficult to collect tax because the people don't have a sense of nationhood, or they don't have the sense that the money would be spent well. So they really don't want to pay, so they evade the tax. And so the tax collection, instead of being 20 or 30% of GDP, runs around 10% of GDP, but the demands on the government are still very extensive for roads, public health, education. And the easy way to paper over that is to just print money and spend it, but that's a different mechanism from what we have in the rich countries. That's an unchecked increase in the amount of paper money, and not regulated by technocrats, not in other words, loss of independence of the central bank. When the central bank is controlled by the political process instead of by technocrats, you pretty quickly get inflation, and then you start getting people doing unproductive things like dealing in paper money more than dealing in goods and services.
But isn't that what we've just done? I truly don't understand the difference between, somebody saying, I'm going to just print a bunch of money to spend it on infrastructure, and us saying we're going to print a bunch of money so that everybody can eat. I'm not saying I think it's the right thing to do. I just don't understand the difference between.
Well, this is a temporary replacement of liquidity, which is lost for transitory reasons. This is not an abandonment of monetary prudence. This is an emergency rescue operation, but in the countries that have the hyperinflation problem, there's a loss of credibility of the institutions, and you have more and more people making demands on the institutions, and fewer people willingly pay into the institutions. Instead, they seek foreign currency, and then they try to take that out of the country or send it out of the country and save it in the financial system of some place else. And once that gets going, then it's very hard to stop. In the U.S., we are frequently the beneficiary of people bringing their savings and putting it here instead of in their home country. And when that stops, then we would have a problem. But at this moment, we're having lots and lots of people acquiring dollars because the dollar is expected to retain its value, but also acquiring dollars because if you have enough of them, it's a credible reason why you should be able to come to the United States.
We want to ask questions and give the folks here an opportunity. So just type in the chat window if you have a question, and we're happy to throw those to Dr. Edmunds along the way. So Ray Dalio has a great website, if you guys haven't seen it, called Economic Principles. It's at economicprinciples.org. And he's got a newsletter on LinkedIn. He sent something out last night where he talked about that the sovereign currency of the world, at one time it was the British pound, or the pound sterling, I guess, and then it became the United States dollar. But before it was the British pound, it was the guilder, the Dutch guilder? Does that sound right?
It would have been because they kind of invented finance capitalism. I don't know, pick a year, 1450, 1500, something like that, selling bonds that were to be paid off in gold, but then selling bonds that were to be paid off in guilders. Once they could issue a bond and have people willingly buy it, paying for it with gold, knowing that at the end of the schedule they were going to get paid back in paper money, then they had a money machine, and we've learned how to use those quite well ever since.
I'm sharing this. If you haven't seen this video, it's called How the Economic Machine Works in 30 Minutes. It's really well done, and it just explains the economic system with really friendly, colorful animations. And what I love is, like, he goes and he does his research and he writes these up in just really kind of plain language. He's a man after my own heart. But what I want to know is, so if he's right and we have these shifts of power in the global currency every couple hundred years, maybe the United States time is due. Like maybe it's time to move on to something else, whether that's a digital dollar or whether that's this kind of cyber currency, this world cyber currency. So if it were a blockchain-based asset that becomes kind of the new global standard, what might it be? Might it be Bitcoin or Tether or some stable coin, or might it be something that hasn't even been invented yet? What would you bet on?
I bet on several different types of stable coins, but with very clear transparency and daily auditing and verifiable backing. One of the things that is lacking in the cyber currency space is what we call corporate governance. That is, say, frequently you don't really know who's running the show. You don't know how many of these things are going to come out of the woodwork, and whole bags of it will come on and fall under the price. So you buy something, and then all of a sudden there's a whole bunch more of it for sale. That really really destabilizes the price, and also deprives something of credibility that was gaining it and has gained it. But then it seems like just as its moment of opportunity. I was thinking earlier today, is this the break that altcoins needed? Well, yeah, but but they don't seem to be able to take advantage of the breaks when they have it.
Well, what's really interesting is Tether, which I believe on this is our coin market cap leaderboard here, I think was number 7 or 8 for the last year maybe, is now at number 4. So it appears to me, my hypothesis would be people are moving out of a lot of these more volatile assets and moving that into stable coins. And then I was also like USD coin, which I think of as being something that's actually quite transparent and is definitely backed 1-to-1 with dollars, has actually dropped in the rankings since then. It's very interesting to see how these stable coins are faring during this time. And to me, like, this is a great stress test of everything, of the entire human race. It's a great stress test. But especially of these stable coins, right? Because like you're not going to see more volatility than we're seeing right now.
Well, it's really a great concept of a stress test in the form of people voting with their feet, or voting with moving the money from one thing into another. Yes, it's always good to have a diversified portfolio, but if you're concerned about the stability of a domestic banking system, or if you're concerned about whether money is going to be created beyond the span of the currency, so that you would then have inflation, then you can diversify into something else. Historically, that was gold, but gold hasn't really been the flight currency of choice. People are buying things like the Japanese yen, the Singapore dollar, and Swiss franc is always Swiss franc. Just anything happens in the world, people buy Swiss francs. Just rely on that.
Oh, if not Swiss Frankfurters, given this time. All right, Steve from Clove has asked if a cryptocurrency was to be used as a hedge against inflation, what characteristics of crypto would be well suited to that? So if we're using it as a hedge against inflation, what would we want to look for?
You could design a crypto that would track a basket of commodities and would track it with some kind of burn mechanism or coin freeze mechanism, so that it would actually be stable relative to commodities, but would tend to rise slowly. They sort of did that with Bitcoin, with this maximum number that can be created. But I think that the idea there, we'll never know what the idea exactly was, but it seemed to be to create something like gold, which has an uptrend, definitely has an uptrend, but with extreme volatility. And you could design a cryptocurrency that would have an uptrend of it, well, pretty much any slope that you want to give it, but would be stable relative to a basket of commodities. And then you could include in that basket things that conventionally are not commodities, like house prices or airline tickets or something like that.
So highly diversified, basically, in many different
Well,
aspects.
you can create a bunch of these, and then someone would trade one against the other, and an investor could then have a little of this, little of that, and have something very stable relative to goods, that would have a kind of built-in uptrend in the price.
Balanced diet, a balanced
Yep.
financial diet. Jason asks, my thoughts are we use a digital US dollar as a way for open source auditing of where the US dollar actually goes once taxes are paid. Is this a feasible outcome? I'm not sure I understand the question. Do you?
I do. With a blockchain is complete illumination of everything that happened. All the transactions are there, and the identities are protected by the anonymity of the private keys. We do have pretty good tracking of who owns the treasury bonds, at least in terms of nominee ownership. So a tremendous number of treasury bonds are owned through accounts in London, and you can track that each month, or Cayman, but of course Cayman is used as a tax haven by people who are not from Cayman. So you get that sort of detail, but I think the question is seeking much greater detail. That is to say, we really want to know where this stuff is going, who has it, and what they did with it, and that is entirely feasible with blockchain.
So I got it. So it's basically asking the trackability of a digital dollar. Would that give us more visibility into where every dollar is going?
Well, we'd also know what the velocity of circulation is, and if too much money was hitting some scarce resource like, let's say, masks or ventilators, you'd be able to see it with a degree of illumination and detail that you cannot do now.
Right, and then of course we have many privacy concerns if every dollar can be tracked to every citizen.
Well, we have privacy coins for that, and I was really ethically challenged trying to figure out what to put in this book that I wrote. I didn't want to give a detailed how-to instructions, but if you read the whole thing, it's in there somewhere, and you could figure out.
By the way, is called Rogue Money and the Underground Economy, an encyclopedia of alternative and cryptocurrencies, available on Amazon right now. We're going to talk about it in just a few minutes. Doug asked, because this current situation is not a demand-side shock, I'm guessing that's the reason the current moves by the Fed had no impact on the market last week. Is it your belief that Bitcoin, with miners and computer code replacing the central bank, could in fact significantly take off once the crisis has ended? In other words, do you think the flaws in the central bank model will actually end up promoting cryptocurrencies?
Well, I would say that there's been a migration away from traditional financial institutions because of their visible lacking and failings. With regard to what the Fed did, there was no immediate thunderous rise in the market immediately attributable to that. But on the other hand, it didn't go into free fall for any more days than it did. So they've only run the movie once, and you can't see what would have happened if the Fed hadn't done the 50 basis point cut followed by the 75 basis point. But that was extraordinary, because not only did they cut it in a meeting that hadn't even been scheduled, which is really, I mean, that's an extremely strong signal. We're not, what they put out was, we're not kidding. We are going to buy assets and pay for them with cash, and we're going to do that every day.
Hugh asks, linked to energy, what about the Fed's payments to foreign banks? I'm not sure what. I'm not sure. Maybe you can give us a little more info on that question.
Well, there's an awful lot of trading across the Atlantic and across the Pacific. That's absolutely routine. And then they have lines of credit with each other. The central banks have what are called swap lines. So there's huge pools of money that can be tapped if needed. And they made a point last week of actually reactivating one of those swap lines, which had not been used for a while. And so did the European Central Bank. They're really saying, you frequently read that there isn't any more that they could do, that they've run out of arrows in their quiver. No, they can do a whole lot more, including way more than what they've already done. They have tremendous latitude, and I think they're using it right now entirely on an emergency basis. I'm not worried about inflation, because the purchasing power of currency is in large part determined by the economic span over which it has command of goods and services. And I can tell you, having been in a lot of the third world, you pull out a $20 bill and things start to happen, even though it's not the local currency of that country. And when you spend it, it goes into the sort of underground economy and eventually makes its way back into a bank account in the U.S. So Federal Reserve paying banks in Europe, yes, they would normally do that, and they would probably get paid back in due course. And if they didn't, they could reschedule that or reprogram the debt. I don't see that as a threat to monetary stability at this time. The threat is the collapse of purchasing power. There's people that would spend money, but they can't because they're stuck in their house or their apartment. So what do? They buy something on Amazon, and then the delivery packages pile up in the lobby as they are in the apartment where I live.
So tell me this: the two possible paths that I spelled out before, which are maybe a digital dollar or a global cyber currency. Give me your thoughts on this. Are either of these likely? What would have to happen to kind of go down one or two of these directions here?
Well, another number of countries have tried to put out a digital currency. Ecuador tried it, and they tried to put it into circulation by paying 1/4 of the government's salaries in that currency instead of in dollars. Ecuador got rid of their local currency because they were having hyperinflation and too many distortions introduced by it. And so the local currency in Ecuador is the US dollar. If you go there, make sure you bring lots of 1s and 5s. 20 can be too much. So that was firmly rejected. Venezuela tried to do it with something called the Petro. Now the Petro, regrettably, I don't know the exact address of the public key, but there are a number of currencies called the Petro. But I had some of them airdropped into one of my wallets, and legally I'm not supposed to own that thing. That's the only restriction that has been imposed by the U.S. government on which ones I could own. But then we have China. The People's Bank of China from time to time has talked about putting out a cyber currency in China, originated by them and probably managed by them. But they haven't entered into enough detail, so we don't know exactly how they would do that. But they would probably have a monetary control committee very similar to the Federal Reserve committees or the central bank committees that we have in Europe. You always end up with that same model. You really do need that you need the technocrats to control that, because otherwise you get too many things going on, like pet white elephant projects in the president's hometown or something like that. That always ends badly.
I want to recommend everybody to read this New York Times article called "The Coder and the Dictator." I'm sharing my screen here with the Venezuelan Petro, which you just mentioned, and this is the fellow that took on the project to actually code it, and then quickly found himself just regretting that decision. And he really was an idealist who thought he could kind of change the world, and he was a real Bitcoin believer. And then he found out very quickly that, just like you're saying, Dr. Edmunds, like, you have to have responsible adults at the control. You call them technocrats, but you really do need people who are leading the way from a financial perspective, who can offer trust, I think, essentially trust and kind of wisdom in kind of moving these forward. And he had neither. And because of that, he found himself basically having to flee the country. It's a really fascinating story. I recommend everybody read it, and it will definitely give you a sense of how hard it is to change financial systems, especially when there's kind of bad behaviors already ingrained in a society. What happens if President Trump puts us back on the gold standard? Asks.
Well, I'm not really expecting that. The gold standard was successful in its day, which was from about 1699 to about 1914. But they had to do all sorts of technical maneuvers to have the supply of gold be adequate to meet the demand. They used various clearing mechanisms and so on, so that only the net amount had to be moved. And then they ended up just changing ownership of blocks of gold that were in a very safe place in New York or London. And so you're moving around. What you're really moving around is little 3x5 cards. The piles of gold themselves don't move that much. Instead, who owns this pile? Who owns that pile? And it had the appeal that if you really wanted to, you could take your paper money and you could exchange it for gold coins at a fixed exchange rate, and that fixed exchange rate did hold for several hundred years. But it ended up unduly enriching people that happen to be living on a place where there was a gold mine, one being South Africa, and it had other restrictions. So the fiat money systems gradually took over, and that a day when you could say that transition became pretty much complete was 1971 and then 1973.
Speaking of gold, there have been suggestions that Bitcoin is a virtual commodity like gold, says Kenrick Nelson. But in this crisis, Bitcoin's price has followed stocks rather than gold or other commodities. What are your thoughts on whether Bitcoin is a type of commodity? I have an opinion on this, but let me hear from the expert. You, what do you say?
Well, it is. It's no doubt that it's an asset, but it's not legal tender, and in most jurisdictions you can't pay your taxes in Bitcoin, so it doesn't have the pinning to the government process that fiat money has.
Well, and also it's hard to get. Like, it's still hard to buy Bitcoin. I'm sorry, but it is. And so this idea that everybody's going to just suddenly fly out of dollars and fly over to Bitcoin, I think is just not in touch with reality. It's hard for people to do. But when I look at that coin market cap listing again, and I see how much Tether has jumped up, that tells to me a more compelling story, you know, that perhaps, again, people who are already in these digital assets, who've already made the investment, are flying to the stable coins as the safe haven during this time. That's a very interesting kind of alternate narrative.
I think that's what's happening. They're moving within the realm of cyber currency. They're moving to a stable coin, and then if they want to make some money on it, they can do lending transactions and various other things that are available to them. Use it for staking and get a return on it. But they take away the volatility of the Bitcoin vis-a-vis other assets, but they lose the diversification effect. So people were arguing that you should buy Bitcoin as a diversification. Yeah, but regrettably, it did that belly flop on the 12th of March, which for me revealed the defects in Bitcoin in terms of how concentrated it became and how far away from the libertarian ideal it has moved.
Charles has one question here, and this is a little long, but he's basically asking a very good question. So he says, it seems to me every 80 to 100 years, the U.S. has to reinvent itself through crisis and then rise from the ashes. Last time was the Depression, World War II, and the U.S. emerged as superpower. And it seems like this crisis era we're in right now is a test for things like universal basic income. And then when the crisis has passed, there will be more opportunity to implement blockchain-based solutions and modernize institutions, a new era of civic mindedness and creation like the 1950s and 1960s. And then he says, recall that the New Deal was twofold: respond to humanitarian crisis and the volatility that could result in a communist revolution. Isn't that our situation right now? Very insightful question in my view. What do you think?
I certainly agree with the reinvention, and I do hope that we'll come out of this epidemic rather quickly. But the epidemic, of course, has triggered strains in the system that you wouldn't have expected. I'm thinking that geopolitically this could get ugly before it really gets resolved, because of the oil price war, which was never a good time for something like that, but it came at an especially bad time. So I'm worried about the stability of the government of Saudi Arabia, and also worried about the geopolitical role that Russia has been trying to play, which is hard to see how they're going to pay for that with $25 oil. But I would say more immediately, it seems like a game as to which one will run out of cash first, cash being, of course, US dollars. So I would say, yeah, I'm expecting that from this we would see a lot of innovation, and we might even see a financial system launch that would have some new look and more efficient enterprises in it than the current system, which, after all, is a bunch of dinosaurs linked together into something that sort of works and can be pushed into working in times like this.
My son said something really insightful. He said, you know, you got to remember that some of the greatest social progress came about after these times of great progress. When you go through like World War I, for example, no longer does it seem like a crazy idea to give women the right to vote, you know? So like you see all of these things happening after these times of great upheaval. It's very difficult to go through them, but we will see major societal change. I got to talk about your book, which I read cover to cover. I didn't really read it cover to cover because it's not that kind of book. It's an encyclopedia which has various listings about all the different parts of digital currencies and digital assets. It's called Rogue Money and the Underground Economy. Now tell me quickly, what's the story of this book? Because you were working on this when we met, which was like 2 years ago, and you're like, I'm writing an encyclopedia. And I'm like, that is a huge project, and it's going to go out of date so quickly. How did you do this?
Well, when we met, I had just acquired the assignment from the publisher, and they were the ones that had the title. I loved the title so much that I really jumped on it, and I got various people to help me and went through several rounds of editing. I hope the entries are quite clear and well edited, because they were edited by 3 people, and they also made me stay away from any jargon. So at one point they weren't even letting me use the word node, which is really that's what I wanted to do. I wanted to really lay this stuff out in little bits and pieces so you can really see how the whole thing hangs together. And it's not this diabolical machine or anything. It's just this nice, clever little thing that was put together with cryptography and a desire to get away from an existing set of institutions. So I really liked it for that reason, but it also could, my dream particularly was banking the unbanked, bringing financial services to large parts of the world population. That, frankly, the way the system is, the conventional system right now, no chance. They could never really be fully functioning in the financial economy, although many of them might have the talents and the energy. They could really add a lot, but they can't. And if they could have some access through a cyber currency type of channel, then that would work brilliantly.
This book is right in my passion zone because I think we need to make all of this easier to understand. And your mission of kind of making this just clear and readable in layperson language is what I really appreciate about it. Just from the introduction, you say, for many purposes, cyber currencies function like government-issued paper currency. Thank you for not saying fiat currency, which most people have no idea what that means. You say government-issued paper currency. However, cyber currencies open up new economic possibilities, particularly in areas where existing financial institutions function poorly. And I thought, like, that is so clear and concise and just well written. And as a writer, I really appreciate that tone is throughout this, especially as you're tackling like really difficult topics in here, like trapdoor function and Turing complete programming language. These are some of the entries in here, but you maintain that real clarity of tone and voice throughout the book. And I think that alone makes this a really valuable reference book.
Well, thank you very much. There's a lot of math that underpins this, and I love math, and I love explaining it in such a way that people can see why it is the way it is. Fiat, by the way, is the present subjunctive of the verb in Latin, and it's actually the first word of the Latin Bible. Fiat is let there be. So you take a piece of paper and you stamp on it, this is money, and so it's let there be money. So that's the translation.
I did not know that. That is so fascinating to me. So we literally create money like an invention. Like
Latin came back to me, ferro, ferre, tuli, latus. It's an irregular verb, as they generally are. The verbs that use the most in any language are the ones that are radically irregular.
Oh, that's beautiful. I love
Same
that.
in English.
I want to be sensitive to time, and we're going to let everybody hang after, but let me ask you one more question that just came in here that says, what's the worst that can happen if Saudi is destabilized? I think they're talking about the oil crisis.
I wish I had more knowledge about the Middle East. I really don't know much about it. I've only been there twice, and each time it was really just a very brief visit. I do fear that my father told me when I was 11 that we would fight World War III over the Persian Gulf, and I'm happy to say that so far he's been wrong. But
that was a cheery thought. Did he tell you that as you were going to bed?
Well, it happened to be the middle of the afternoon, but it stayed in my mind for the rest of my life, as you can see.
Sweet dreams. World War III's coming. Get ready for it.
Well, he was exactly of the age to have. He was 21 on the day of Pearl Harbor, so that'll give you an idea of what his mindset was.
Yeah.
And he grew up overseas and saw the Japanese co-prosperity sphere in Southeast Asia, which was not as charming as it sounds. Rather less, in fact.
Well, you know, something I told my kids the other day was like, keep a diary. Like, and I encourage everybody during this time, keep a diary, because this is a period of history that we are going to study for ages. And, you know, you're going to tell your grandkids about this time. And you're going to want to remember, what was it like? What did I do on a day-to-day basis? Who did I talk to? How did I get through? What kind of made me sad? What made me happy? What was my daily life? Because you're going to want to go back to that. And that magnitude of this time in human history, I look at it as like, we're really lucky that we get to live right now. I know that sounds like a weird thing to say, but we're living in this momentous time right now, and we're all still here. That's what's great. We're here. We're here. And
that's a really great suggestion, that people should keep track of what they're doing each day, because at this time, a week seems like a month and a month seems like a year. Consider that Andrew Yang was considered a sort of a fringe candidate when he was promoting universal basic income, $1,000 for each person. we just if they voted tomorrow, which apparently they will, we just exceeded that by a good bit.
In many ways, he was like the right guy at the right time, because he got us all at least kind of used to thinking about that idea.
Well, they did try that. They did try that in Finland, and they were actually floating it in Portugal. I was lucky enough to publish an article that came out first in Portuguese and then in English, arguing that it was a pretty good remedy for Portugal because of the demographics, and also as a way of assimilating the immigrants.
Well, Dr. Edmunds, thank you so much for coming tonight. Again, the book is called Rogue Money and the Underground Economy. It's available on Amazon. It's available on Kindle as well, and highly recommend it. It's a really great addition to your blockchain library. And we're going to hang out with Dr. Edmunds. If you got more questions, we're going to unmute you after this is done. But for those watching the recording, thanks so much for joining us.